Glitch. Yes, I'm going to introduce Joe Huxley, regional sort of director for regional strategies for FSD Africa. Joe, can you hear us and join us?
I can, Mike. Can you hear me?
We can hear you very well, thank you.
Okay, great. I'll crack on. There's a bit of a delay in the line. I'm calling in from Kigali, but hello everybody. Thanks very much for joining us, and Thea, thanks for teeing us up. That's really the intellectual underpinnings of what we've been trying to drive forward in sub-Saharan Africa with FSD Africa. And it's really our challenge to try and operationalize the think piece. And I'm going to take you through 4 or 5 slides that show how we're trying to do that. But as with all good presentations, there's a caveat. Our approach is only 6 months old, and we're quite new to the financial sector space in fragile states. So it's very much a test and learn approach that will strengthen as we move. But I'm really happy to tell you where we are at the moment. So for those of you who don't know FSD Africa particularly well, we're a DFID-funded financial sector development program. We absolutely follow the market facilitation approach. We are a £60 million program, and quite distinctively, we have grant funding, but also this DFID instrument called development capital, which allows us to use investments to catalyze the market. We are 20 people in size. We're based in Nairobi, and we're part of a wider network of FSD instruments across Africa that are all UK aid funded. So on to operationalizing the think piece that Thea outlined in her slides. So starting with our vision, our direction of travel was laid down on paper and presented to our board in December, and it really took the DNA from Thea's think piece and codified it into inclusive financial sector development language that the FSD Africa board bought into. And it has a 3-country approach initially to provide us with some focus. So DRC, Sierra Leone, and Zimbabwe are our 3 countries. And then to allow us a bit more breadth, we've focused on 2 themes that overlap nicely with Thea's promising practices. So one of them is forcibly displaced people, and the other is remittance corridors into Africa and between African countries. So the principles that underpin our work is let's not overstretch ourselves too much. So there's a lot of trying to apply what FSD Africa does already in markets it's familiar with in more fragile markets. So we call that doing core business in new markets. We also like to stretch ourselves and challenge ourselves a little. So we have some more business. So that's new themes and new priorities that we don't currently have expertise in, but are building it up quickly. And then the third thing is what we call indirect business, which is about trying to achieve far more through partnership and a research agenda indirectly than we can do directly. So that's things like hosting events, convening workshops like this, and generally gathering people, institutions and thought leaders beyond ourselves to encourage them and incentivize them to work more intensively in fragile states. So as I said, we're operating a test and learn approach. We have theme and country theories of change for all of our work, but something interesting to note is that they're very flexible, and they change month by month, particularly as we're building our portfolio. And then to make sure we learn from what we're doing, we're not going to wait 5 years before we write an expensive case study series. We're planning to try and institute something called a live case study, which involves myself on a monthly basis writing a quick blog that highlights what we found difficult and what we found to be a real opportunity. So we're calling that the live case study. It's kind of a learning journey because we know that M4P interventions can be quite complex and sometimes difficult to remember a few years down the line when you come to write your case study. So I think one of the interesting things to say is that the operational approach beyond the technical approach is critical to us. So to move from strategy to implementation, we put together a 100-day plan, which Fragile State enabled FSD Africa, and it was based on 5 principles. So one is around people. So making sure our people are well trained to operate effectively in fragile states. So we had training sessions in things like hostile environments and first aid, building in incentives for existing FSD Africa staff members to operate in fragile states. They currently don't need to. So working in East Africa is close for us, and we have good relationships there. But how do we incentivize our staff to go to Sierra Leone, to visit DRC, to put together interesting interventions for refugees and internally displaced people? So people's KPIs at FSD Africa are being adjusted accordingly. And the whole team is being coached by someone who's done this for the IFC. So making sure we're people ready for fragile states is an important point. The next thing, which I think is very M4P, is making sure we have the depth of knowledge and understanding and relationships in the 5 priority areas that we want to operate as well tied down as possible. So hiring a country manager in each of the 3 countries has been a priority. We've got 2 on board so far, and we're hiring others. We're using a competition mechanism to roll out a lot of the M4P interventions we're working on, which not only provides an opportunity to the market to apply, but it finds its way into the press. It's a little easier to invite VIPs because everybody wants to be associated with a competition. And the byproduct for us is an interesting intervention, but also deeper relationships in the market, which is quite interesting. We know that things are going to be complicated. So on the process front, we're ready for more of a logistical challenge around visas. So for instance, to get to DRC from East Africa, the visa wait can be 2 or 3 months, not only for FSD Africa staff, but for consultants. So sometimes it's a little more difficult to be as flexible as you might like. So that needs to be built into project timelines. And things are riskier. So sensitizing our investment committee and board and DFID sponsors to the level of risk on a project by project basis is extremely important here, particularly when we're taking investment positions that expect a return rather than grant giving. But there are obviously development outcomes related to grant giving and investments that just take more time and are more at risk. Politics is something we've been running up against already in places like Sierra Leone. There's an election coming, so the central bank is closing down, which makes them a more difficult partner to work with. And it's a thin market, so there aren't many good quality country managers and consultants we can work with. And already we're coming up against conflicts of interest with our country manager. And as well as you can plan for them, it's really difficult when it happens. It can slow your whole process down of building up a credible portfolio of work at the busiest time. So that's definitely something that is more difficult in fragile states. And then on the partnership front, we recognise that doing things in 2s and 3s can be a lot more effective, not only to boost the numbers of intelligent hands and pairs of eyes on pieces of work, but also to create much more influence than we can do ourselves. So we're partnered well with all the different country offices in the 3 countries we work. ELAN is a good quality M4P program in the DRC, and we know them relatively well. And then we use the glow of the UNHCR brand to open some doors for our refugee work, which I think is extremely useful. I'm not going to go into this, but the point is on this slide, since Christmas time when we started, there's a lot of process involved to get us fragile state ready. So the lighter green are things like country hires, networking events, due diligence processes, MOUs being signed. They're kind of inputs to our M4P portfolio. The darker green we're starting to move towards outputs, and I'd say that even darker green is a kind of far-term output. We're certainly not at outcome level with any of our work yet. There's a heck of a lot of process involved, I think, is the point. But you can move quite quickly in particular areas, and there's no lack of opportunity. And I'll explain a little bit more about that in a minute. Here are some graphics. A couple of points here. Again, Thea's think piece is a foundational piece for us that we're trying to build on. The guy in the top left is Joe Abbas. He's our country manager in Sierra Leone. And on the right-hand side, we've got a DFID classification of fragile states in Africa, of which there are 26 in sub-Saharan Africa. And they're categorized into high, medium, and low fragility. I think the slides will be available after this. And again, just a few photographs from the processes so far. Okay, so a little bit more detail on refugees and IDPs. So our thesis here really is that the market failure is a perception amongst the banks and other financial service providers that refugees and other IDPs are relatively unbankable, when in fact we think there are some strong demand signals that show that markets can be made within refugee settlements. So there's some context there which again I think we can skip over. I think we know most of it. But the key point is that beyond 2 or 3 months, refugees need a lot more than food and shelter. And of course they still need food and shelter, but they have money coming into their pockets, they have businesses to run, they have remittances to receive. There is some demand here for financial services that we think the financial sector isn't taking up in as quick a way as possible. Traditionally, donor interventions are more geared towards non-market solutions. What that means is, necessarily there's a lot of direct delivery in refugee settlements. There's the provision of food and shelter, as I mentioned, and World Food Programme. Payments go to every household here in Rwanda, which is a context I know relatively well. But beyond that, we've seen relatively little private sector activity in some of these settlements, which we think can be a real development opportunity. We think there's a win-win between financial service providers providing financial services to clients and clients using them in a welfare-enhancing way. So our initial focus is in Rwanda. And there are many reasons for it, but a critical reason is I am here, and it makes sense for me to follow up, and it's easy for me to follow up on discussions with UNHCR, with government, with DFID in a simple way. I'm a useful pair of hands and feet. The government is extremely progressive towards refugees. About half of the refugees at the moment here in Rwanda have a national ID card. Beyond their UNHCR ID card, which they can use to register for financial services. We've met the minister. We have a letter of understanding signed with Midimar, which is the relevant ministry here, which allows us access to camps. So we've been to the camps and we've talked to refugees to establish demand. We've also started talking to banks to see what their appetite is for providing financial services. And critically, UNHCR has a good and deep office here that are interested in livelihoods beyond the direct delivery of food and shelter. So we're well partnered with them. So to build momentum, we've been to Gihembe camp, which is home to about 14,000 Congolese refugees. Most of them have been in situ for over 10 years. It's a long-term camp. And although some people are resettled to the States each year, not many are. So many financial service providers are worried about the dynamics of refugee populations and people receiving a financial service 1 month and then perhaps going absent the next. But what we see in Gihembe is a much more protracted situation of a population of 14,000 Congolese refugees that in themselves constitute a small market. So one of the interventions we've crafted is it's a research project, but we're really trying not to deliver a typical donor report here. We're trying to develop a management consultancy type market sizing exercise, which provides good quality, monetized market segmentation of the types of refugees across sub-Saharan Africa, but also their demand in dollars for different types of financial service, from loans to savings accounts to insurance products and remittances. And we've got a captive audience of private sector players now that are really interested in this research. It's almost like some free R&D for them. So we're going to push that to them at the right time. It'll also involve to put a much more human base onto the research some financial diaries in Rwanda, and we're calling it the Refugees and Their Money. So look out for that. That will be out in 2 or 3 months. But it's really not for you, I suspect. It's much more for decision makers at banks. We don't think that's enough. So what we're going to do is take some decision makers from banks here in Kigali and beyond into Gihembe refugee camp for 3 days. And what we're going to do is provide them with small fora to meet remittance users, to meet business owners, to meet men and women who could be their future clients. And we're going to use that 3 days for banks and microfinance institutions and others to prototype products and develop new ways of reaching refugees in Rwanda with financial services. The incentive is the 3 best ideas will receive a £10,000 seed capital grant from us. And then the best 2 ideas from that bunch of 3 will receive a larger chunk, which could be in grant, debt, or equity form. And I think the interesting thing about this is it's not going to be technicians like the central bank here, like Diffin, like myself, judging alone. It will be refugees themselves to make sure we're being really client-centric. So that's a very quick overview of what we're doing in relation to FDPs. A few photographs there of our trip to Gihembe, the terms of reference, a lot of process involved again, but we're gathering momentum. There are some more details on our website of the approach as well. We've got a country manager or a theme manager for this work called Howard Miller. There's a photograph of him there. We're already starting to make a little bit of a ripple effect in the press here. On the right-hand side of the slide, there's an article in one of the biggest newspapers here in Rwanda of the minister at one of our events talking about financial inclusion, which we think is just all helpful stuff. Here's our theory of change, which all good M4P programs should have, and we're diligently making our way up the chain. And it feels a little overwhelming, and things are moving back and forth as we hit more roadblocks. But the one thing to say is there are some really quick wins out there. So as well as working our way through a clear vision for what we're trying to achieve, we're also talking to people in the market, and we're talking to end users. And this slide is a very good example of a quick win. We know that refugees in Rwanda receive remittances from Europe and from the States, but through talking to them and through a bit of research, they typically receive remittances through traditional platforms, which are expensive and a bit inaccessible from time to time. Refugees need to walk 4 or 5 kilometers to cash out the remittance payment that they receive. And that makes them vulnerable when they're walking back to the camp. And sometimes they're not just vulnerable, they're stolen from. So we talked to a couple of non-traditional providers. One's called World Remit, based in the UK, and one's called Use Remit, based in Kampala. And as some of these figures show, they can quite dramatically cut the cost of remittances to refugees in Rwanda. These are very Rwanda-specific details. But in addition to that, they can also pay straight to a mobile money wallet. So instead of walking to your agent for half an hour or longer, you can get paid to your mobile phone, and you can cash out or spend your money in the camp or via digital currencies. So we're about to sign an MOU with both of these companies, World Remit and Use Remit, in July, and we're going to advertise directly to refugees starting in Gihembe the fact that these services are available. We've already tested it with a couple of refugees, and they're really happy with the service. But the bigger point here is, although we can work our way towards a noble outcome in a very market facilitation type way, there are quick wins that I think M4P practitioners really need to seize upon, particularly in fragile states where markets are a bit shallower. And supporting 1 or 2 winners, or picking these winners, can be really useful. And that's what we're trying to do as well. Sorry, Mike, I think I've gone over time, but hopefully that was...
Sorry, Mike. Joe, I was going to say, so we are running out of time a little bit. I don't want to cut you off. Have you come to an appropriate conclusion?
That's right, yeah, I'm done.
Joe, I think... Great. Oh, well, look, thanks very much. I mean, that was fascinating, and I think it really helps to have the tangible examples of what market assistance development means in the context of humanitarian response. If anyone's got any questions, either for Thea or for Joe, I mean, we'll come back to questions after Tim's had a chance to speak, but I urge you to kind of get those questions into the chat box now so that we can begin to filter through them and decide which ones to bring into the forum. So on my right is Tim Waits, as I said, Senior Livelihoods Advisor for DFID's Chase Department, and 10 months in the Protracted Crisis Hub.
Yeah. Thank you very much. I mean, I can try and squeeze things down a bit. I've been asked to talk about Chase, the Conflict, Humanitarian and Security Team's work on protracted crises. And I would say, firstly, that I mean, the sort of recommendations and conclusions that are coming out of this report do talk quite nicely to our thinking as well. So, you know, taking long-term approaches, engage early, the sort of 6-month window when people need stuff for refugees, you know, sort of how quickly then can you then spin that round to actually giving people transfers which will sort of help them engage with markets and local economies. So that's very much our sort of framing of this. I'm leaving, but I am also the lead on the Comprehensive Refugee Response Framework, which is really very much framing refugee responses around the sort of things that Joe was talking to. And I would say it's sort of gathering in interest because it does talk very much to the new ways of working. It's bringing together the humanitarian development and stability thinking. So why did we decide to form a Protracted Crisis Hub? I think that we had something called a PAC report, which is a government what's PAC stand for? Public Accounts Committee did a report, and their recommendation was that we should start looking much more closely at our portfolios of sudden onset crisis, and then to include in that longer running and more complex crises. So, you know, I'm very aware that people within this room have probably been working in protracted crises for 10, 20 years, so we didn't want to reinvent the wheel, but we wanted to do a review of good practice, where people are struggling, where we're doing well in this particular context. 90% of our humanitarian assistance goes into these emergencies. So the earthquakes and, you know, the typhoons and everything which get on television, that is a very small amount of our overall, what we call humanitarian spend. We're very aware that once people are displaced, once there is a conflict, it can run definitely for longer than 5 years, sometimes 10, 20, 30 years. So we were very much challenging the sort of humanitarian style responses of giving people things for long periods of time. So this is people who've been forcibly displaced, and we're looking very much at refugees and IDPs. We're challenging the sort of status-based targeting that goes on within the refugee space, and that we should be doing much more geographic targeting, poverty, vulnerability, so taking in host communities as well as refugees. That's kind of what the CRRF is talking to as well. So I think our sort of top line is that life-saving humanitarian assistance is essential, but not enough in protracted crises. So we started off by doing a light touch review across all of our programs, and we were looking at protracted crises writ large, so recognizing that some fragile and conflict affected states, we were looking much more at conflict affected contexts. So within a country like Kenya, you have areas which are relatively stable, you have areas which are relatively unstable, same in Ethiopia. So many of the countries, they do have stability with the sort of fragility, usually around the edges in pastoralist areas. The key findings of our review, and we're writing it up at the moment, it's kind of an internal document.
Conference will automatically end in 5 minutes.
Automatically end in 5 minutes.
Anyway, I think I'll just talk the clock down then. so the key findings are that there needs to be a conceptual shift to blend humanitarian and development interventions. I know that people will roll their eyes and say we've been doing this for a long time, but I think we do have programs that are doing this, and I'm thinking particularly of safety net programs, cash transfer programs, our Braced program, which is a climate change program working in fragile context, is trying to work right across the system. There are islands of good practice in DFID, but these should be extended, and we need to have sustained engagement to shift international practice. The sort of things that we're going to be doing in the future is very much working with as much as possible, protecting and building local national systems and capacity. So even within our humanitarian responses, the sort of default is to go in with parallel systems. And we're sort of saying that if you are in a protracted context, there are vestiges of financial systems, of a water system, of a health system. Start there and build up. Sustainable service delivery and looking very much at job creation, so getting economic development going, and this is very much where the cash transfers rubric comes in, where you could be starting with an ad hoc cash in envelope transfer, but as you cash in envelope transfer,
Sorry about that, everybody. Another technical glitch, but Tim's back online.
And very much talking about getting development partners into this space. So UNHCR have been mentioned. We are pushing very much the World Bank with their IDA 18 and their refugee window to get into these sorts of spaces, and through the World Bank get more national government engagement, other development actors, better involvement with private sector, banks, money exchangers, these sorts of, and very importantly, getting in more predictable, efficient and longer term financing. So, think about, 5 years minimum, maybe we can stretch to 10 years, 15 years, definitely not your 1 year sort of humanitarian cycles. We're also pushing and testing the grand bargain reforms, and within that we're collaborating with UN agencies, World Bank, ICRC, and key donors, which at the moment are sort of US, Germany, Denmark, and some of the Scandinavians, to influence the international response. I've already mentioned the comprehensive refugee response framework, but I feel this is a very good framing for this new ways of working and new thinking of how to work in these spaces. And then more global and political attention on tackling the drivers. So, so looking at the underlying causes as well as what's required. And senior championing. So our ministers are behind this, and we are looking at this within the broader framework of humanitarian reform and tackling crises in a different way. I think that's what I want to say.
Great. Well, thanks very much, Tim, and I apologise for that sort of interruption in the middle, which must have been quite disconcerting. So we're going to throw it open to the audience for questions. We are running a little bit behind, so I think what I'll say is we were scheduled to finish in 10 minutes, but I think we should give it an extra 10 minutes because of the delay. So for everyone who's still online, we're going to carry on for 20 minutes. I'm going to throw the sort of the debate open, if you like, to questions from the floor or questions from people who've submitted them through the chat box. Keep plugging ideas into that chat box, please, by the way. Does anyone from the floor have a question for initially? Yes, please.
Conference will automatically end in 30 seconds.
The end in 30 seconds.
Sorry, please go ahead. Okay.
We'll just reconnect it.
Can I just say we might be about to lose the conference. So if we do, we will immediately set up another one and send you a link by email.
Just click the same link.
Or click the same link, and you should be. Hopefully, you can get back in. So I apologise for that if you do get cut off in probably in the next 5 seconds. Otherwise,
Conference ending. Goodbye.
both sort of long-term solutions that can then actually work in the market for financial services. So I'm talking about things that work immediately. So informal access to access to informal services that can then be linked to formal financial services and so forth. And I didn't hear too much about that in the presentation. I'd be interested to hear ideas. Here we really think that, for example, informal savings groups are one approach which work in host countries and help advance solidarity between refugees that come in, for example, Jordan, but also in the countries themselves, and they need the immediate access to services, but they're working to link them to formal financial services. And then when there's crisis, you can then revert back if financial services are closed to the informal members or the view to extend. So I'm really interested to hear if there are other solutions that work for the market that can be immediate, informal, and then let access to formal financial services.
Go ahead.
do you want to just, I'm not sure everyone will have picked up your question from this microphone on the desk, so Tim, if maybe you could just reiterate what you heard as the question before you answer it.
Yes, I think what you're asking is about the link between the informal sector and the formal sector writ large. But within financial services, you know, there is that sort of disconnect. I think in the report somewhere it says that in some of these fragile contexts, 80% of the economy is informal and probably 20% formal. So it is picked up in here. And when I'm talking to our economic development people in DFID, they talk about, you know, sort of informal jobs and formal jobs. And they don't want to sort of get too hung up on it, but you know, sort of good work, you know, which gives, you know, a reasonable pay and you're not being abused is kind of what their focus is, whether that's informal or formal. And I think that in these contexts, you have to start there, really. I mean, I think that's where you're going to get most of your, you know, sort of benefits, because the poorest people, the most vulnerable, are usually outside of those systems. To me, it's how do you get people into that sort of market system, market economy. I'm very well aware of the savings and loans schemes that CARE's been doing in Ethiopia. We're doing similar stuff in northern Kenya and looking at expanding that out. So to me, there's kind of an evolution, if you like, of, you know, starting with your cash transfers, then looking at that broader sort of financial inclusion, getting a bank account. And once people are sort of connected to the financial system, no matter how sort of, you know, shallow and fragile that is, you can start talking about, you know, other ways of getting people graduating out of long-term poverty. So yeah, I take the point. Yeah.
And I would just add, completely agree, especially in more fragile contexts, it's the informal sector, we can't ignore the formal sector, because realistically most of our initial partners are going to be in the informal sector. But I also think, you know, building on what you were saying, is the savings groups could be an entry point, but there also is an opportunity to do different market sizing and scoping with populations. Just recognizing that these populations, there's many sub-market segments within this population. So are there different segments that we know for the foreseeable future will be dependent, for example, on social safety net programs versus different programs, different populations that we know potentially could be linked right away with financial institutions or with, you know, different trade finance options. Or then also recognizing potentially the segment right below, the ones that are currently linked, maybe that's part of the population that we can also focus on as well, so that they can be moving out of some of these safety net programs. And that's what we're trying to do in a number of different countries. I mean, even looking at Uganda right now with South Sudanese, trying to do some market sizing and scoping. And I know, Joe, that's one of the things, I don't know if you can, because of the technical issues, I know that's one of the things right now they're doing in Rwanda as well.
Yes, Joe, I think, is online. Joe, did you hear the question?
I did, but I don't think I've got anything to add. I thought that Tim and Thea covered it really well.
Okay, thanks. So another question from the floor.
Just following on from that question, I'm quite interested in this touch point between formal and informal. So I wonder, for example, mobile money, and I just don't know the answer to this question. Mobile money transfer, is that formal financial service? I know that internet banking or mobile banking would be the formal sector, formal banking. But mobile money transfer is for sure the very first way in which I think informal economies and people who are not linked to banking would start to interact with money. So I'm just wondering, from your perspective, that's seen as formal or informal, and when does one start and one end?
So mobile money itself,
Yes. Yeah, so mobile money itself, yes, is a formal financial service. But when you talk about cash transfers, if we're talking about humanitarian cash transfers, for example, if Mercy Corps, for example, was delivering cash through mobile money, we would just consider that a delivery platform for humanitarian aid. Mm-hmm. But mobile money itself can be used as a formal financial service. And one of the things that we've been doing quite a bit of, and we've got some partnerships that we've done, actually some case studies we've done in partnership with ODI actually recently, was what are pathways from some of these humanitarian cash transfer programs to longer term financial services. Because someone, receiving a cash transfer, like emergency cash transfer on a mobile money, does not express demand for mobile money. That's just the platform that they've used. But kind of going back to the earlier point, we do know that there are potential market segments within that population that we could be targeting for continued usage of financial services. So potential to want to store their money electronically, or to be able to send and receive remittances electronically. So that right now I think is really the next stage within a lot of the electronic and humanitarian cash transfer world, is where are there opportunities for some of these longer term pathways.
And formal and informal isn't black and white. I think you've got different elements of formality that come in. So Francesca Brown, who was sitting there, had to rush off at 1 o'clock, but I mean, she is our financial inclusion person. If you think of it around financial inclusion, she would say that if you've got a card that you can load up and then just withdraw the money, that's not financial inclusion. If you've got a bank account, that's financial inclusion. But some of it's semantics, really, I think. I think there is this sort of layered approach that you have where you are bringing people more and more into whatever is the formal system within some of these sort of, far off places.
And I do think that is the value of mobile wallets, is that they can replace formal bank accounts, because realistic in a lot of places that we're working, or a lot of these fragile environments, there is a very limited traditional bank infrastructure. And realistically, that's probably not going to be built out, but there is an opportunity to build out some of the mobile networks. And that's why one of our recommendations is really investments, not only from a donor perspective, but really from government perspective as well, some of these digital payment networks as well, because the agents, where the people can cash in and cash out of the system, can be much closer and run much more efficiently and much more cost effective than a traditional bank branch.
Okay, any more questions? Yeah, please go ahead, Joe.
One of the interesting things, just to build on the conversation about mobile money services, is that it creates a lot of data. And for formal financial service providers, that data is extremely valuable. It can be used for all sorts of things. For instance, in Kenya, the Mshwari lending product that lots of people on this phone call probably know about is based on mobile money transaction histories. So if you're sending and receiving money on a frequent basis, it produces a certain amount of data that can be algorithmed into a form of credit assessment that can then enable lending. And it's not just credit products; it's all types of products, including insurance as well. So it very much can be a gateway to, again, and it's not black and white, but more formal forms of financial inclusion.
So one of the audience here is asking, can you expand a bit more on the kind of data that you're talking about, Joe?
Sure. So in Kenya, just to be specific, every time you receive or send or top up money in your mobile wallet, you create a data trail of transaction points, the sizes and frequencies of transactions. Now, in a more formal environment, that data might already exist by other forms. It might be tax revenues for small businesses and other forms of reporting to regulators. But in an informal environment, that data, which is recorded on a transaction ledger, can be used to, just as I said, determine whether that person can be upsold to. So instead of it just being a payment service that they use, it could be a different type of savings account on their mobile phone, or it could be a lending or borrowing product or an insurance product.
Thanks, Joe. Any other questions? We've got one here at the front.
Hi. Jake Lomax from the Springfield Centre. I had a question which might be relevant to all of you. I was wondering about the issues of coordination as we start taking more systemic approaches in humanitarian spaces. It seems as we're sort of trying to take a facilitative approach when there's more actors and more actors working in different ways. The issues of coordination become much more problematic than they are already. And I was wondering if you have any experience of effective ways of countering that, or if there are any sort of measures in the pipeline for improving coordination.
Excellent question. I was in Brussels last week. There was a member states EU gathering, and we were looking at refugee responses, and one of the working groups was looking at coordination. So we spent about 3 hours talking about it. I think the general conclusions was that donors, institutions, agencies don't like to be coordinated. You know, people. It's just not a natural thing for people to have to do, and we sort of roll our eyes and go to coordination meetings. But it's going to be complicated because if you're looking across the humanitarian coordination, that's got a whole politics and sort of culture of its own. Reminds me of a bunch of badly behaved children at a breakfast table. Sort of it's just a bit hectic. Development coordination is a very good example of development coordination around the Productive Safety Net program in Ethiopia, and donors put a lot of money into one big pot, and the secondary benefit of that is because they've got money invested, they coordinate and they sort of find out what the trade-offs are, and I think that's a really good model. And then you've got the whole sort of peace stability part of things. So if you want coordination, it's going to be right across the board. And something I came away with was we've got these big EU trust funds, we've got the World Bank IDA 18 funds, and they should act, I think, as your sort of point of engagement. When we talk about coordination, nobody ever talks about the national government, unless you're in Ethiopia, then you have to coordinate with the national government. So I think we need to put a lot more emphasis where the government is in the right place, Uganda, Rwanda, Ethiopia, Kenya, that the buck should stop with the governments, and we should be coordinating around them. But no, it's a good question. I think it's something that we're going to be struggling with.
Joe, did you want to respond to that at all?
I think it's a great question, and I think Tim's explained how coordination happens at one level, amongst multilateral and bilateral donors, but there's also a coordination challenge at the implementer level, actually on the ground in capital cities and in refugee settlements, etc., etc. And it's difficult, particularly in the refugee space where everybody's clambering to do something interesting and useful. Sometimes you see some agencies being quite protective, and it needs a good quality face-to-face phone call. And I think it's the skill of a market facilitator to be very low ego and collaborative where possible. And our general principle is 2 heads are much better than 1. And because we're not finding many market systems programs in these fragile spaces, it's not actually that many conversations you have to have before you get to the right person. Particularly in places like Sierra Leone, where there's a lack of market systems development in the financial sector. But we've to build on Tim's point, our entry point is usually government, and it's usually a DFID country office, and then it's the next big donor that we think's credible and useful. And in fact, when we present something that looks interesting to government, they take it on and want to be seen in the lead, which I think is very, very useful, and it's good for how we might exit in the future. But it is a bit tricky, and I don't think there is a strategy document or a tactical document you can write to promote good quality collaboration. Often it's about people. Institutions don't collaborate, people do. And you need to get on the phone, and you need to be tactical where needed. And DFID are really helpful for us because they've got more horsepower, a larger brand, and levering in the DFID country office at the right moment is super useful. But I don't think there's a single answer, and I think it is difficult. And also it's a tad tricky sometimes when you're trying to craft a quite subtle market systems development intervention, often not using a lot of money. It can be totally eclipsed by a large donor piling into a particular place, directly delivering lots of traditional aid. That can really, it can be quite disruptive for a market development program. So that's another challenge as well that I don't necessarily have an answer to.
I would just add to that. I mean, that's a challenge I think we're seeing more and more. The one that Joe just mentioned is, trying to be a market facilitator, but also recognizing some of these protracted crises is also where there's considerable funding going as well. So how dealing with some of that very high-level market distortion. I think, again, I completely agree. It's organizations need, it's higher level at the DFID level, but then it's at the organization level also needing to be coordinating. And going back to one of the earlier questions, I think in an ideal world, that's where some of the sequencing of interventions can also play a stronger role. If one organization is stronger or has funding, let's say for more emergency, they could be working to start sequencing. I don't see that happening as much as I'd like to, but I do think there is an opportunity. And I think to some extent, we as even practitioners are going to be forced into some of those situations, just especially as a market facilitator.
Okay, thank you, Thea. Tim, and Joe, I'm afraid the time has run out on us, so I'm going to have to wrap up the conversation. It's been really fascinating listening to you three share your experiences, and I was also obviously extremely interesting reading the report. I hope you all have a chance to do it. This webinar has been recorded. I should have let you know that at the beginning, and it will be available on the Beam website with links to all the relevant documents. But also, we can carry on these conversations through the Beam Exchanges forum, which is on LinkedIn. So if you're interested in, what we'll do is, if there are any questions that weren't addressed in the conversation, we'll post them up on the LinkedIn forum, and you can add your own comments and thoughts there. You could, if you're not members of the Beam Exchange LinkedIn group, go to the Beam Exchange website, and you'll find links to the LinkedIn group. And on the link, once you're members of the LinkedIn group, you can see all the threads that come there. So thank you very much for participating.